Hello, everyone. Welcome back to the NoBullEconomics podcast. I think this is our either third or fourth. So we're happy to be back. I'd like to start today's episode off by mentioning a new, fun, exciting game that we have planned coming out soon. We mentioned it in the past episode or two, but we kind of just wanted to go over it once again.
And if you haven't checked out those episodes, go watch them. They're great episodes. One on the housing market and one on the state of the consumers. They're great episodes full of information. Sorry to interrupt you.
No, absolutely. In total agreement. So with our stock picking game, this is how it'll work. Each person will choose 10 stocks and they'll submit them to us. And then they'll be placed in a competition to see how your 10 stock portfolio performs against ours and mine, Damien's, and any other people that decide to join. So
and the S&P 500 as a benchmark. So currently we're just running through this as a company trial, with a few people inside the company. As I've harped on in the past few videos, Dan ain't doing so great. Well, the market overall since our start date isn't doing too great, but we do have two people that are in line with the S&P 500 at negative 3%. So, it's just fun to have some competition and learn a little bit about the stock market and actually have something to keep your eye on the stock market. Now we have a reason to be in the stock market, watching the economic activity. It's all for the fun and games, but at the end of the day, it's about competition, bettering ourselves, and learning more about finance.
And a possible prize.
No one could go bad with some extra money in their pocket.
Yes, sir. So what's the topic at hand today, Damien?
So this is actually a fun topic in my opinion. I think it's a big deal right now in this day and age. So what we're going to talk about to you today is the lack of check and balances when it comes to the C-suite executives of these major corporations. As of late, we've been having a lot of political, social issues. But here at NoBull, we don't like to focus on political and social issues. We like to focus on profitability. And a lot of these companies, and within a lot of these companies, there are C-suite executives specifically making decisions that are ruining the profitability and public image of their companies. And that's a problem.
Yeah, no, it absolutely is a problem. Like an example, we're not going to go into the nitty gritty of what they actually did, but Target came out with a marketing campaign, and it ended up really hurting the company as a whole. But it doesn't seem like anybody at the top really cares, even though money was lost through this campaign.
Sorry to cut you off again, but a lot of money was lost. And just for reference, their stock is down 20% over the year. And so if I was a shareholder and I put in my money into Target and I lost 20%, I would be heavily upset with that. That's just bad management, bad judgment, and overall it's unprofitable.
A lot of this can be blamed to these large investment funds, which are pooling together a bunch of these stocks, and they don't hold the companies really. They don't hold them responsible for actions they make. It's not a very a hands-on board of directors making sure the company's profitable and promoting shareholder wealth, and that's kind of a common theme we see, that the promotion of shareholder wealth is kind of put at the back burner for other things like ESG initiatives and things of that
and it isn't only Target, Anheuser-Busch, just to name a couple that have been in the limelight recently. They also are going through a kind of a similar situation where their stock is down 15% since they had their public meltdown. So it's been a rising issue as of late, just because these companies are now starting to make decisions that are clearly against the profitability of their own business. Their consumers aren't in line with the decisions that they're making. That's going to hurt their overall sales, which it has already shown to do. And so with Danny, with what he just said about the investment funds, I think it's time for people to start taking their money out of these investment funds. You have to find something to do with your money yourself. If that means, pulling your money out of the investment funds and buying the stocks individually, that's what it means. If it means pulling your money out of the investment funds and buying hard assets like real estate or anything else of that nature, that's what it means. But I think if you're a shareholder, if you're an owner of a certain asset, You got to be able to hold those people accountable. And if you can't do that, what's the point of you owning it? You're not influencing the decision making of these people at the C-suite. You know, the 500th floor. I know there ain't no 500 floor buildings, but the 500th floor of these buildings, you know, making the decisions at these large companies. And if you can't maximize your shareholder wealth to be able to achieve the investing goals that you would like to, you have to do something about it. And it's definitely not keeping your money with these investment funds just so they can switch their money to another company and do the same thing there, switch it somewhere else where they're going to do the same thing there. That's the only story.
Well, it seems like, yeah, there's a lot of negligence maybe at the top with these executive roles. They almost seem untouchable, like honestly, like CMOs and CEOs making all sorts of shady decisions. Meanwhile, people's money and livelihoods are at stake, and there doesn't seem to be like a responsibility or like a drive to help the shareholders, or they don't really see any consequences either after they've really like put a damper on shareholder wealth.
Yeah, and on top of the shareholders, it's not just going to impact the lives of the shareholders. Think about the hundreds of thousands of employees that are working at these companies. As long as these companies maintain a good level of profitability, they'll be able to hire more people and keep jobs. But if they're losing profitability because of decisions that they're making, they're going to have to start cutting back on employees. And what is that going to do? That's going to hurt everyone involved, except for the C-suite executives, of course, because, you know, they get their massive bonuses and they got their massive salaries. I mean, it's just bogus.
I think it's time that shareholders and individuals hold these companies accountable so they're not making rash decisions up at the top and causing like a loss of money.
No, I agree. And
that's why the NoBull investing strategy, even though taking it from me after my 10% loss, but the NoBull investing strategy is to focus on companies who really have a focus on driving profitability and creating shareholder wealth, and that's kind of the companies that we target and look at and would love to invest in, quite honestly.
No, very much so. We're working on building out a financial model that we'd like to use, as a report as well. And this model is significantly based, it's actually only based on profitability. How much money are you bringing in and how much money are you sending out? That's how companies should be graded.
Yeah.
That's the only way companies should be graded. And if a company is doing something wrong, don't buy from them. What happens then? Their profitability goes down. That means they lose rank in our model. That's as far as it goes. If the company is doing good and they're providing value to the economy, to the community, buy from them. That's a good company. And then what happens then? In our rankings, they'll go up because their profitability is going up, their revenues are going up, their enterprise value is going up. The overall contribution to the economy and the community, as I said before, is going to be going up. Those are good companies. Companies that are making these rash decisions, destroying shareholder wealth, destroying their companies, they're not good companies. You got to get out of them ASAP. Now, this isn't financial advice. Don't listen to me, but I'm just saying.
And I'd also like to add, at NoBullEconomics.com, we have a article that we posted this week about this very issue called The Problem with Investment Diversification. So I recommend everyone go check it out. We also have a few other great articles this week, including the second quarter of 23 retail same-store sales and the Walmart investor presentation, Inflation Here to Stay. These are all articles that came out this week that I think you guys should check out and you'd learn something. And it's a fun, short read, just 15 seconds, and it'll give you some insightful information.
Very insightful. And I know normally our podcasts are typically around 10 minutes, but we've been figuring something out. We think that this shorter time is going to be beneficial to y'all. It's going to be beneficial to us, allow us to get just clean, quality content right to you. So I think that's a good stopping point for us there, no?
Yeah, no, that's great. So we'll see you guys next time. We'll come to you with a new video next week, and it'll be a good one.
Oh yeah, thanks for tuning in.